Welcome to the Hunting Pigs mini lesson. We're not going to talk about hunting pigs in Texas, Oklahoma, Florida, or in Arkansas. Today, we're talking about creating passive income generation. And it's a great tax strategy for the right AIM status taxpayers. And it's a really nice real estate strategy for our gold diagnosis clients and taxpayers and our red diagnosis taxpayers. So we're going to dive into what is hunting pigs when it comes to tax planning and strategy. And let's jump into our agenda. A lot of times taxpayers have losses on their tax return. A lot of times those losses really are related to real estate activities, so they are passive. And what happens is that a taxpayer will have these losses or these deductions on their tax return that they can't take advantage of. And a lot of times those taxpayers are on a very high marginal tax rate. So those losses really just carry forward and they're not utilized at all. And part of the hunting pig strategy is to find investments that fit your needs, that are passive income generators so that you can enjoy income that's tax-free. So it really fits that red and that gold TTF tax strategy. So we talk about cash flow versus tax flow. We talk about that the government or the taxing agencies are your involuntary business partner. So the tax laws are written to discourage investing in passive activities that create losses because they just carry forward. So let's flip it and let's find pigs, passive income generators, so that you can get not only cash flow, but tax-free cash flow. And especially if you're in a red diagnosis, that could be very valuable. So we're going to talk about that. We're going to look at different types of passive income sources. I'm going to walk you through a form called an 8582. That is the IRS form that tracks your passive losses. So you can see on your tax return that you have these passive losses that you want to release. And then we'll hit our calls to action. So passive income sources. You basically have two buckets. One, you have this trader business that you're not materially participating in. We have several pieces of content in a separate mini lesson on material participation. So that's bucket one. We also have the more common bucket, rental activities. Now, special rules do apply to rep status taxpayers and to real short-term rental property owners with material participation. There's additional content on that. But in general, rental activities are going to be passive by default and trades or business without material participation. There are some common sources that are listed here, but then there's some sources that you might not have thought of before, like personal property rental, royalties, limited partnership interest in oil and gas. So these are your common sources of passive income. So if you can find something, you can find a tax strategy and build out your board of directors that you're working with people that you trust to invest in these type of passive income sources, and you have passive losses, now you've just flipped the script and you might be enjoying tax-free income. Let's take a look at that 8582 form to determine if you even have passive losses. We're getting a little technical here. This is that form 8582. It gets attached to your federal tax return. In this case, our friends Joe and Jill Taxflow are passive investors. They own a rental property, which is 123 Main Street here. They also own an interest in a limited partnership or an LLC, TTF LLC. Unfortunately, TTF LLC has provided them with a passive loss, and so is their rental property. So in Joe and Jill Taxflow's case, you could see on this form 8582, they have a total of $30,000. You could see here on line 3 of passive activity losses. Those are detailed, like I said, between that rental property, which is right here, and the TTF LLC investment. That means that Joe and Jill Taxflow could enjoy $30,000 of passive income, taxable passive income, and pay no tax on it. So that's very powerful. And the 8582, I'm going to share one more thing with you. You could see the current year. You could see activities with a net loss in the current year are totaled with the activities in prior years here. So if you have those prior year losses, make sure that those are carried forward in your tax return, and make sure that if you have those losses, try to take advantage of them, which ties into our call to action. First, look at your tax return, review that form 8582 if you have it, and see if you have passive losses. If you do, you're a good candidate to hunt a pig. Review pig investment options, talk to what we teach your board of directors, your tax professional, your financial advisors, determine if you should look at different passive income generators to enjoy that tax-free income. And if you have passive losses, consider investing in the pigs and enjoy that tax-free income. Thanks for watching this mini lesson. Have a great day.
John here from Teaching Tax Flow. I wanted to thank you for watching this video. We literally have hundreds of hours of content between podcasts, webinars, videos just like this built specifically for you, the taxpayer. Whether you're a full-time employee, you're a freelancer, you're a contractor in some other sense, or you're thinking about getting into business for yourself. Everything here at Teaching Tax Flow is perfect for you, basically going off of the roadmap provided by the IRS to legally and ethically reduce the taxes paid over your lifetime. So be sure to subscribe to this channel and connect with Teaching Tax Flow, and we will see everybody very soon.